I want to first start by stating the responsibilities of the Accountant General as a whole and in connection with the financial statements. The financial statements being presented today are set out on pages 50 to 503 and have been prepared by the Accountant General in accordance with the provisions of Section 63 of the Public Finance Act 2014. The Minister for Finance and Economic Affairs is responsible for the management of the Consolidated Fund and for the supervision and control of all matters relating to the financial affairs of the government. Under the provisions of Section 53A of the Public Finance Act, the Permanent Secretary for the Ministry of Finance and Economic Affairs is responsible for the effective application of the Act and any regulations, instructions, and directives issued under the Act. The Accountant General is responsible for establishing and maintaining a system of internal controls that is designed to provide reasonable assurance that the transactions recorded are within the authority and properly record the use of all public funds by the government of the Gambia. The Accountant General is also responsible to ensure compliance with the financial instructions as per Section 6(4) of the Public Finance Act 2014. To the best of my knowledge, the system of internal control has operated adequately throughout the financial and fiscal year ended 31st December 2019, and the provisions of the financial regulations have been reasonably complied with during the year. I accept for the integrity of these financial statements the financial information they contain and their compliance with the Public Finance Act 2014 and the related financial regulations. In presenting the financial statements, I will take you through to the set of financial statements as contained on page 32. I present the Statement of Revenue and Expenditure, Consolidated Fund, Enhanced. For total revenue, total tax revenue for the year 2019, 10,656,276. Non-tax revenue, 1,145,342. Grants, 2,698,119. For this year under review 2019, actual revenue totaled 14,499,737 for that year. Excuse me, that 14 billion comprises of tax revenue, non-tax revenue, and grants. I will take you through also to page 334, which page 34 of the financial statements, which also outline the
34.
Yes.
34 is blank.
On the financial statement.
Yes, we have that.
Madam, the audit report, on the report of the Auditor General.
Yes, the page 34 in my page here is blank.
Okay. The title is expenditure, actual expenditure versus budget. So we would I would just go through the actual total expenditure for the year under review.
Mr. Ba, come. Sorry, yeah. Who is blank? No, it's blank. My text, unfortunately, that part is not printed, it's blank. Okay, may proceed.
And I will take you through the details of expenditure for the year under review. Total expenditure for 2019 actual stands at 16,527,972. And on page 38, it would give you details of recurrent expenditure, which totals to 15 billion and 5,399.94. The total development expenditure, which is contained on page 41, stands at 804 billion 804,149,775 hudud. With this, I would like to take you to the report as part of the financial statement, which says consolidated statement of cash receipts and payments on page 50 and 51.
Okay.
The consolidated statement of cash receipts and payments for the year ended 31st December 2019 gives us total receipts of $17,683,558. This comprises of tax receipts, social security, other revenue, grants, donates, BTL receipts, borrowings. The report also outlines the payments, which total to 17,201,524. This comprises of transfers, social benefits, other expenditure, operations, loans and interest payments, and capital expenditure. The set of financial statements, which have been presented and broken down to the different areas of expenditure, receipts and payments, would now also supported by accounting policies and explanatory notes, which are contained at the back of the financial statements. And this outlines our accounting policies and whatever assumptions were made for the preparation of the financial statements. Over to you, Chair.
Thank you very much, Accountant General. You can now move on to the auditor for the management letter. The auditor opinion and then the management letter.
Good morning, Honorable Chair. Apologize. I wish to read the auditor's report on the government accounts for the year 2019. The certificate of audits. Okay, I refer you to page 3 of our report. 503. Page 3 of 503. Not the management letter, or the report of the Auditor General on the government account. Auditor General, this one, sir. Thank you, Honorable Chair. I report on the financial statements. I satisfied that I have audited the accompanying financial statements of the Government of the Gambia, which comprise the consolidated statement of receipts and payment, statement of revenue and expenditure consolidated fund, the statement of financial position consolidated, the detailed revenue and expenditure comparisons, accounting policies and explanatory notes to the financial statements for the year ended 31st December 2019, set out in pages 31 to 503. Opinion, an adverse opinion. In my opinion, because of the significance of the matters identified in the basis of the opinion paragraph below, the financial statements of the Government of the Gambia did not present fairly the financial position of the Government of the Gambia as at 31st December 2019, and their financial performance for the year then ended in accordance with the Public Finance Act and cash basis international public sector accounting standards. The basis for the adverse opinion: the inability of the Accountant General's Department to provide supporting documentation and information and explanations on timely basis was the most significant obstacles to my audit of 2019 financial statements. The audit began in November 2020, but it could not be completed until 2021 November. My ability to secure evidences in support of all audit assertions, but particularly the completeness, accuracy, and regularity of transactions included in the financial statements was impeded. 1. I note the difference between the general ledger and cash equivalent, note 15, totaling 4,968,902,000. As a result, the total cash balances in the financial statements were misstated. 2. I identified a difference of 3,462,118,000, 3 millions rather, 462,118, is 0.29 butut. Between the translated cash book balance and the general ledger balances for the special project US dollar account. This was as a result of not using the official USD exchange rate as at 31st December 2019. There is a risk that the special project US dollar cash balances disclosed in Note 15 and cash equivalent were understated in the financial statement as a result of misstatement in the general ledger and the cash book. 3. There were unreconciled items amounting to $6,501,536,055.64 butut during my review and reperforming bank reconciliations. These items included carryovers from previous years that remain in the books and no evidence of correction were provided to me. Failure to correct unreconciled items for more than one accounting period renders the entire reconciliation process fruitless. There is no point in performing reconciliation if errors and omissions are not corrected and adjusted on time. 4. I note below the line BTL project 1922 code used for receiving funds were also used to raise payments, leading up to an understatement of 62,662,598.47 butut of total receipts reported in the cash receipts and payment disclosed in the financial statements. 5. I identified differences between BTL receipts disclosed in the consolidated statement of receipts and payment and the total BTL funds receipted in the general ledger. As a result, the financial statement is misstated. 6. I noted a difference of 139,871,000 between the year-end cash balances disclosed in the statement of financial position and the statement of cash receipts and payments. There is a risk that the total cash balances reported and recognized as assets in the financial statement in the statement of financial position were materially misstated. 7. I note that the Accountant General used inaccurate balances in performing year-end bank reconciliations in respect of the Suku Al-Salam T-bills, treasury bills, special project bank account and special deposit bank accounts, which amounted to 465,157,414.23 butut. This is indicative that the reconciliations are not reviewed by senior personnel to administer the necessary actions to correct the errors. 8. I note the differences between detailed impress report and the extended trial balance amounting to 1,119,000,000 and 54,918.22 butut. As a result, the outstanding impress balance disclosed in the financial statement is misstated. I note 9. I note that revenues in respect of sale of timber by the Ministry of Environment totaling 241,962,480 during my audit. Non-tax balances is also misstated. 10. I note overstatement of scanning fees amounting to 34,676,214.75 butut. As a result, the scanning fees reported in the financial statements was overstated for the period under review. 11. Revenue receipts and deposit slips amounting to 1,746,633.53 bututs were not presented for audit. Without supporting receipts, it will be difficult to confirm the accuracy of revenue balances in the financial statements. 12. I reviewed the Islamic Development Association loan grant and the billing for payments on loan number 36060 Gateway Project and offered loan agreement number 1128P Third Public Works Project, respectively, and noted that overpayment of loan interest amounting to 244,227.57 butut. The government might be losing huge amount of funds as a result of overpayment of interest on loans. 13. I reviewed the Export-Import Bank of India and ECOWAS Bank for International Development Loan Agreements and billings and noted penalty and commitment fees amounting to 277,911.19 butut, not disclosed in the financial statement. These will mislead the users of the financial statement. 14. I note on the statement of 3 billion and 13,513,494.71 butut in respect of debt balances disclosed in the statement of public debt of the financial statement and the account recorded in the debt management system. Therefore, the statement of public debt disclosed in the financial statement is misstated. 15. The statement of the outstanding commitment includes amount relating to incomplete transactions such as pending government orders, placed with suppliers, outstanding impresses, and unpaid vouchers and claims. These commitments were supposed to be cleared by the year end, meaning that they should have nil balances in the financial statement. Nevertheless, I noted an outstanding commitment of 351,693,000 in respect of ministries, departments, and agencies not cleared at the year end. 16. I identified a discrepancy amounting to 21 billion 21,789,455 and 0 butut between actual collections from domestic customs and excise tax as per the cash book report and the general ledger. 17. I performed calculations of tax revenue returns and noted a wrong computation of tax revenues totaling 18,219,475 dollars. In general ledger, the financial statement is misstated. I also note 18, the difference between the extended trial balance and the financial statement trial balance totaling 645,188,834.80 bututs in respect of different components. Number 19, government grant totaling 92,323,463.51 butut disbursed directly to sectors were not disclosed in the financial statements. 20, I note on unsupported payment of 50 million in respect of timber proceeds to the government of Senegal. 21, I have identified monies totaling 69,732,155.38 held at various commercial banks on behalf of government that were not disclosed in the financial statements. Mr. Chair, continuing on key matters, key audit matters. The key audit matters that are those matters that, in my professional judgment, were of most significance in my audit of the financial statement of the current period. These matters were addressed in the context of my audit of financial statement as a whole and informing my opinion thereon. And I do not provide a separate opinion on these matters. I have determined the matters described below on the key matters to be key matters communicated in my report. 1. Award of the Banjul Drainage, Roads and Sewage Project. The government of the Gambia, through the Ministry of Transport, Works and Infrastructure, signed a contract with Guy Enterprise for Banjul Drainage Project, for Banjul Drainage Road and Sewage Project in May 2019, amounting to 35 million US dollars, 720,000, equivalent to $1,821,720,000. Following the approval of the President and Cabinet. This project is significant in my audit of the financial statement as the amount involved is so material. It requires thorough review of procurement files and discussions with officials at the Ministry of Transport, Works and Infrastructure, as well as personnel of the Office of the President. Therefore, experienced audit personnel were attached to obtain complete information as well as conduct interviews with relevant officials. Consequently, I developed procedures which, among others, included the following: discussions with officials at the Ministry of Transport, Works and Infrastructure to understand the procedures followed in awarding the contract. Request a copy of the Gazette from the Ministry of Transport, Works and Infrastructure to confirm that this was awarded, as indeed this award has indeed been gazetted before the signing of the contract. Reviewed the Public Procurement Authority Acts and Regulations and other relevant laws and regulations that govern the award of contract of this kind of projects. Review the legal opinion provided by the Ministry of Justice on the draft contract against the final contract to confirm whether anomalies were fully addressed and recommendations fully implemented. Reviewed also the progress reports from the period under review and held discussions with consultant and principal engineer supervising the project to confirm activities and perform progress reported by the contractors. Based on the procedures performed, and observe the following in addition to misstatements noted under the basis of the opinions above. 1. Failure to gazette the award of the Banjul Drainage, Roads and Sewage Project. During my audit, I noted that the Ministry of Justice had advised through letter reference AG 31303/001/part 6 in sub 16, dated 18th June 2019, that the approval by the President and the Cabinet of the award of the Banjul Drainage and Roads Project, Sewage Project to Guy Enterprise in May 2019, amounting to $35,720,000 should be gazetted before the conclusion of the engineering, procurement and construction EPC contract agreement. I requested a copy of this gazette from the Ministry of Transport, Works and Infrastructure and confirmed that this award was gazetted 18 months after the commencement of the contract. I advised the management that the proper procedures should be followed to ensure transparency and accountability. Second, project commenced before contract signature. My review of documentation and discussions with officials revealed that the Banjul Drainage Road Sewage Project contract was signed in May 2019 and tabled at the National Assembly on 12 June 2019. The project is scheduled to be completed by November 2021. I reviewed the consultant's report as well as the updated program of work of the project and noted the actual work commenced on March 18, 2019, 2 months before the contract was signed and submitted to the National Assembly for discussion in June 2019. This further raised concern over the transparency leading to the award of the contract. 3. Flaws in Banjul Drainage Road Project and Sewage Project. I reviewed a letter of intent from the contractor, Guy Enterprise, who offered to pre-finance and implement the Banjul Drainage and Sewage Project. I note major omissions such as detailed study and design, work schedule and bill of quantities that were submitted by the contractor, that were not submitted by the contractor. There is a likelihood that huge premiums would be paid to the contractor for its contingency and risk. Modification to design may attract extra costs to government. There is also no evidence of due diligence conducted to confirm that the contractor has the available financial resources, including performance security to execute the project. Public debt, Honorable Chair. The Directorate of Debt Management, DLDM, is the main unit under the Ministry of Finance and Economic Affairs responsible for the management. It deals with all aspects of public debt management, both domestic and external, including designing a national public debt strategy, conducting debt sustainability analysis, participation in loan negotiation, approving disbursements, effecting payments of government public debt, maintaining a comprehensive loan-by-loan database on government and government guarantee external debt and external grants to the government in the Meridian software, coordinating with the Central Bank of the Gambia regarding the issuance of domestic debt instruments for fiscal purposes. The total debt stock of the government of the Gambia disclosed in the financial statement total $40,400,166,067.36. Public debt is significant in my audit of the financial statement, as is comprised of 28% of the total expenditures reported in the financial statement. The complex nature of contracting and payment of loans poses high risk during our audit, which requires more experienced audit personnel to ascertain the accuracy and completeness of statements of public debt reported in the financial statement. Consequently, I developed procedures which, among others, included the following: the calculation of the principals and interest payment made to ascertain their accuracy, reconcile the statement of public debt reported in the financial statements and the debt stock reported in the debt management software systems to confirm its accuracy. Review loan agreements to ascertain payment schedules for both principal and interest respectively and agree records in the debt management system and the amount on the bills. Review the Public Finance Act and other relevant laws that govern management of public debt. Based on the above procedures performed, I observe the following in addition to misstatements noted under the basis of the opinion above. Overpayment of loan interest. My examination of payments vouchers relating to loan under 060 Gateway Project and OFIT loan agreement number 1128BP, Third Public Works Project, revealed an overpayment of interest amounting to 4,870.82 equivalent to US dollars, equivalent to $244,227.57 butut. Management has confirmed that the error and promised to recover the amount in their subsequent payments. I also advise the management to increase supervision and reviews of transactions posted in the Integrated Financial Management Information System (IFMIS). Miscalculation of interest and principals. My review of the budget estimate revealed that each loan or project is assigned unique number, which is used for budgeting and in making payments in the Integrated Financial Management Information System. During the audits, I noted that principal and interest payment in respect to two projects were made from the wrong project codes. Management confirmed the misclassification and promised to adjust them in the financial statement. I also advise management to increase supervision and review of inputs by junior officers. 3. Failure to disclose penalty and commitment fees. Penalty charges are incurred due to delays in payment of principals and interest of a loan, while commitment charges are incurred as a result of untimely utilization of project disbursements. Both charges represent losses to the government. During the audit, I note payments of penalty and commitment fees amounting to $383,800.22 butut were not disclosed in the financial statements. Although I advised and management agreed to adjust this in the revised financial statements. I note in my subsequent review that it has not been adjusted in the financial statements. I do not wish to go through the report on compliance, Honorable Chair, if that is. The heading is the report on compliance. Okay. We move to the responsibilities of the Accountant General and the Auditor General. Also, I just read the heading. And then I move to the page 15 of 503 and the report of the Auditor General on the public accounts of the government of the Gambia for the year ended 31st December 2019. Introduction. Honorable Chair, this report is submitted in compliance with Section 160 or 161C of the Constitution of the Republic of the Gambia, which requires the Auditor General at least once in every year audit and report on the public accounts of the Gambia, accounts of all offices and authorities of the government of the Gambia, the accounts of the courts, the accounts of the National Assembly, and the accounts of all public enterprises. Section 161D of the Constitution requires the Auditor General to report to the National Assembly on the public accounts of the Gambia and to draw attention any irregularities in the amount audited and to any other matter which the Auditor General's opinion ought to be brought to the notice of the National Assembly. Section 161E of the Constitution requires the Auditor General to publish for public information an annual report on the account when it has been discussed in the National Assembly. 2. Main matters arising from my audit of the accounts for 2019. The following paragraphs outline the main matters arising from my audit. A management letter has been sent to the Accountant General which included a detailed description of the issues so that appropriate corrective actions may be taken. Failure to submit financial statement to the Auditor General in time. 2. Section 163(1) of the Public Finance Act states that after the end of each financial year, the Accountant General shall prepare and submit to the Auditor General with a copy to the Minister the financial statement and information set out in the schedule of this Act within 3 months or as such a period as the National Assembly may by resolution appoint. Contrary to the above provision, the 2019 financial statements of the Gambia were not submitted within 3 months of the year end of the previous financial year by the Accountant General. Warrant of for expenditures not approved by the Auditor General. Section 151(3) of the Constitution states no money shall be withdrawn from the consolidated fund or any other public funds of the Gambia, including withdrawal under subsection 4, unless the withdrawal has been approved by the Auditor General or a member of the National Audit Office designated by him or her for the purposes and is made in a manner prescribed by the Act of the National Assembly. As in the previous years, I noted that the 2019 warrant for the expenditure was approved by the Minister of Finance and Economic Affairs in contravention to the dictates of the Constitution. Failure to disclose grant disbursed directly to sectors. Paragraph 1.3.12 of Part 1 of the cash basis of IPSAS requires the disclosure of total cash receipts of the entity, showing separately a subclassification of total cash receipts using a classification basis appropriate for the entity's operation. The subclassification of the cash receipts into appropriate classes will depend upon the size, nature, and function of the amounts involved. In addition to disclosures of the amount of receipts from borrowing, the following subclassifications may be appropriate. A total amount of receipts from external and other assistance, possibly classified by amount of grant, loans, and other assistance provided, the significant classes of providers of that assistance and the amount provided. Cash basis of IPSAS.
Okay, that since those issues are entailed in the management, you can just read the headings.
Okay.
Then when you get to the management, you can get the details.
Thank you, Honorable Chair. Failure to notify budget entities of the environment. Unpresented cash activity reports in the program-based budgeting. Failure to adhere to GBPA conditional approval for rehabilitation work at the State House. Inappropriate procurement processes by the Office of the President. Failure to adhere to contract agreements. Commencement of project before contract signatures. Flaws in Banjul Drainage Road Sewage Project. Delays in submission of technical and design specifications. Non-monitoring of shipments. Unaccounted GTRs. Books, differences between Note 15 and cash equivalent and the general ledger, differences in translating foreign currencies held, overdue unreconciled items, self-accounting projects not monitored, differences in cash balances, differences between financial statement balances and cash book figures, differences in prior year balances, differences between tax revenue receipted in the cash book and the general ledger, differences in tax revenues in the cash book and the amounts disclosed in financial statement, failure to seek approval to outsource revenue collections, failure to provide a number of containers exported by agents, unaccounted government revenues, unauthorized use of revenues from sale of timber, unsupported payments of timber proceeds to government of Senegal, unretired impress, differences between detailed impress report balance and extended trial balance, non-disclosure of penalty and commitment fees, differences between statement of public debt figures recorded in the debt management system, differences in translating public debt, losses not fully recovered or written off, failure to recover on-land loans to the state-owned enterprises, failure to set borrowing limit for SOE state-owned enterprises, classes of expected output not in estimated budget, non-explanation of material differences between budget and actual amount.
You can read the conclusion.
Thank you, Honorable Chair. Introduction to the introduction of an integrated financial management system in 2017 led to significant improvement in the quality of financial statement produced over the years. However, when the system was upgraded to Epicon 9 in 2013, it came with a lot of challenges. 2.104. Due to these challenges, with Epicon 9, government opted for further upgrade of the system to Epicon 10 and has now gone live in January 2020. With the hope of addressing the defects identified in Epicon 9, we are optimistic that this upgrade will restore user confidence and ensure the reliability of the systems as envisaged. Otherwise, the gains made in the with Epicon 9 may be reversed. That would be very unfortunate development considering the significant improvement to the accounting systems and the amount of money spent in the procurement of the IFMIS. the 2.105. The upgrades also included Epico web-based access, which uses a simplified web uniform platform resource locator, login page, any available internet connection, anywhere, any available internet connection, and is compatible with all common browsers. While this upgrade greatly increase accessibility and may reduce transaction costs, they equally present some challenges and potential security threats to accessing financial information and processing and financial transactions by ministries and departments, including embassies and sub-treasuries, remotely using the Epico web base. 2.1606. It is therefore envisaged that since Epico 10 is web-enabled, allowing for remote access, vulnerability issues relating to remote access are adequately addressed and does not present any danger to the system now and in the future. In the current 2.107, in the current public finance management system, the government of the Gambia has introduced program-based budgeting in 2016, being an instrument of policy analysis and is critical for achievement of government policies such as National Development Plan. 2.108, the annual budget of the government of the Gambia is based on planned activities of each ministry, department, and agency. The implementation of these activities will lead to the achievement of government programs. Implemented programs will be translated to achievement of strategic development plans of each ministry, department, or agency, which in turn led to the achievement of the National Development Plan. The 2.109, the current public finance management system does not capture the extent to which planned activities are implemented, and therefore making it difficult to make achievements on progress of government activities. Acknowledgement. I'm grateful to all my staff for these tireless efforts and the dedication to duty. The support and the cooperation are deeply appreciated. The efforts of the Accountant General Department in improving the quality of financial statements are also acknowledged. Thank you. With the management letter, how do we want us to proceed on detail? Because it's the findings only. Yeah. Yeah. Excellent. The management letter, executive summary department, I think we don't have that for this report. We usually have it for other reports, but not for this report. Not for this report, sir. Yeah, Mr. Chair. Okay. We start with page 10 of 512. 10 of 512, finding. Environment approvals. A review of the ministry's department agencies file at the Ministry of Finance and Economic Affairs revealed that environment amounting to $67,960,644.78 budgets were made between and across budget entities. However, there was no evidence to suggest that these were approved by the minister before transfers were made to contrary to the above provision of the financial regulation. Finding 3.1.2. Next page. Page 12. failure to notify budget entities of environments. A review of MDA's file at the Ministry of Finance and Economic Affairs reveals that environments totaling 2,469,441,557.38 bucks were made between and across budget entities. However, there was no evidence provided to suggest a formal notification was sent by the Ministry of Finance and Economic Affairs to the budget entities before and after the environments were made, contrary to financial regulation. The finding has been a subject of our previous audits. Finding 3.1.3, failure to present information to budget on budgetary process. That's on page 14 of finance call circulars. The financial regulation, part 16, part 6, part 2, 6, subsection 6.1 states, a public officer shall produce records for the record of the transaction for inspection for audit purposes when called upon to do so by the Accountant General, the Auditor General, or Director General of the Internal Audit. Call circular. This document highlights the budget preparation cycle, provides a detailed schedule and guidelines to be followed for each budget cycle, including timetable, when MDA should prepare, when to submit the budget, when to defend the budget, bilaterals, when reviews will be made. Forecast revenue submitted by MDAs. This entails revenue expected to be collected by MDAs. The budget bilateral meeting minutes, where MDAs defend their proposed budgets. The meeting is centered on program objectives, key target groups each MDA is supposed to serve, the activities to be implemented. Yes. To the particular fine. During our audits, we requested for submission of the above documentation to ascertain whether the 2019 budget for the government of the Gambia was prepared in accordance with the call circular guidelines on the implementation of the program-based budgeting. However, none were provided up to the time of writing this management letter. Finding 3.1.4 on page 17, unpresented cash activity report on the program-based budgets. An examination of items, itemized report and chart of account revealed that all segments of the chart of account are not populated, and as a result, a report on the actual activities could not be generated. We noted that there is no control in place to ensure budget entities give accurate and complete cash allocations to the respective sub-budget entities. Several requests were made by the audit team for the provision of the activity report submitted by MDS. However, none were provided up to the time of writing this report. Finding 3.1.5, environments above 75% threshold. A review of the itemized report revealed that 404 environments totaling 2,687,362,341.40 bututs were made that were above the threshold of 75%, contrary to the above section of the Public Finance Act. Details are shown in Appendix 3. Findings 3.1.6, failure to prepare a strategic plan. During the audit, we requested for the strategic plan of all ministries, departments, and agencies, but only few were presented. The following budget entities did not provide with us with their strategic plans up to the time of writing the management letter. Office of the President, the Judiciary, the Independent Electoral Commission, Public Service Commission, Ministry of Defense, Ministry of Interior and Religious Affairs, Ministry of Foreign Affairs, Ministry of Justice, Ministry of Finance and Economic Affairs, Ombudsman, the Ministry of Agriculture, the Ministry of Transport, Infrastructure, Works and Infrastructure, the Ministry of Trade and Industry and Employment, the Ministry of Basic and Secondary Education, the Ministry of Health, the Ministry of Youth and Sports, the Ministry of Environment, Climate Change and Wildlife, the Ministry of Information, Communication, Infrastructure, the Ministry of Fisheries and Water Resources, the Ministry of Higher Education, Research, Science and Technology. Finding 3.2, capital expenditures, and starting with 3.2.1. Failure to adhere to GPPA conditional approval for rehabilitation work at State House. Review of documents signed on 2nd May 2019 revealed that Guy Enterprise was awarded a contract of $17,488,155.63 for the construct of new President Office and rehabilitation work at State House. Our review of documents, however, showed that the contract was required by GPPA to revise the bid of quantities and to resubmit for approval before work can commence. These amendments to the contract were required to be made before works could commence, including the following: clearly define or clarify supervisory role of the works as this is not indicated in the submission. Remove the $950,000 contingency allocation from the contract. The total of $55,750 is on page 211 of the bill of quantity to be added to the grand total of $17,488,155.63. We noted that despite the failure of the contract to make the amendments directed by GPA, work went ahead nonetheless. Finding 3.2.2 inappropriate procurement process by the Office of the President. During the review of the procurement process, we noted the following: review of correspondence with the Ministry of Transport, Work Infrastructure, reference BLD 331-160-02, sub 322 ES, dated 28 March 2019, revealed that an assessment was carried out by the Ministry to satisfy the volume and extent of rehabilitation works that was carried out at the State House, the result of which was used as the basis for the payment of the $17,488,155 to Guy Enterprise. The assessment was carried out prior to the approval of from GBPA on 29 March 2019 for use of single source and the subsequent contract signing on 2nd March 2019. It is therefore clear that the approval was sought for use of single source well after the appropriation was completed. This is a gross violation of the GPA regulation. Furthermore, examination of the procurement documents revealed that goods brought from Fatima Trading amounting to $5,637,000 were delivered to the Office of the President before requesting for single source approval from GPA. The date of the goods delivery note was 11 March 2019, while the date on the GPA approval was 2nd April 2019. This suggests that the services of Fatima Trading were used 3 weeks before seeking the single source approval from GPA. Review of payment vouchers number 01PV023731 dated 21/012/2019 revealed that the Office of the President equipment to the tune of $50,251 was paid to Fatima Trading, for which no receipt was provided, as well as signature of recipients to confirm payment receipt, although these items were delivered. In addition, the purchases order and the requisition quotation were only issued 4 days after the payment was already been made to the supplier on 27 December 2019. Finding 3.2.3, failure to adhere to contract agreement. During the review of procurement committee minutes, we noted that rehabilitation works at the State House was considered urgent that necessitated the request to seek approval from GPA for use of single source in awarding the contract. Further review of the contract documents signed between the government of the Gambia and Guy Enterprise for the rehabilitation works revealed that payment would be made stages as detailed below. Advance payment 20% of the contract sum $3,497,631.13. Interim payment 30% of the contract sum when the ground floor is completed, $5 million, equivalent to $5,246,446.69 Butut. Second interim payment 30% of the contract sum when the first floor is completed. That will equivalent to $5,446,446.69 Butut. And a final payment to be made 30% of the contract sum when the first final payment 20% of the contract sum when all the other works are completed. $3 million, equivalent to $3,497,631.13 Butut. The contract further required the certificate of completion for each stage would be issued by the Minister of Work before payment is made. However, we noted from the review of payment vouchers number 01PV021043 dated 27 May 2019 dated that Guy Enterprise was paid the full amount of $17 million as opposed to the payment in stages. In addition, the copies of completion certificate each were not provided for the audit team. Finding 3.2.4, failure to gazette the award of Banjul Drainage Roads Sewage Project. During the review of documents, we noted that the Ministry of Justice has advised through letter reference AG 313//01 Part 6 subsection 16 dated and a letter dated 18 June 2019 that the approval by the President and Cabinet of the award of the Banjul Drainage Roads Sewage Project to Guy Enterprise in May 2019 amounting $35 million $750,000 should be gazetted before the conclusion of the engineering, procurement and construction EPC contract. The audit team requested a copy of the gazette from the Minister of Works Infrastructure to confirm that this award was indeed being gazetted before signing of the contract, but none was provided for review up to the time of writing this management letter. The audit team also requested for evidence of invitation for project proposal from Office of the President initially sent to Guy Enterprise and any minutes of contract committee meetings relevant to this project from the Office of the President, but none were provided for review up to the time of writing this management letter. Finding 3.2.5, project comments before signature of contract. The review of documentation and discussion with officials revealed that the Banjul Drainage Roads and Sewage Project contract was signed in May 2019 and tabled at the National Assembly on 12 June 2019. The project is scheduled to be completed by November 2021. Further review of consultants' report and inspection of up-to-date program of work of the project revealed the actual work commenced 18 March 2019, 2 months before the contract was signed and submitted to National for discussion in June 2019. This further raised concerns over the transparency leading to the award of the contract. Finding 2.2.6 on pages 35. I can still summarize. Okay. We could finding 2 flaws in the Banjul Drainage Project sewage. This is already covered in the previous findings. Anyway, we could proceed to the other finding. Yes. 3.2.7. This is a review of the delays in submission of technical and design specification. Review of minutes of summary of monthly site meetings held in December 2019 by the consultants to the International for Africa reveals the contract has only provided the drawing and design specification for approval 9 months after the work has commenced. Finding 3.2.8 non-registered suppliers. Examination of payment vouchers revealed that some suppliers were selected to offer services by ministries, departments amounting to $18,675,405.50 when they were not registered with the GPPA. Details are provided in appendix. Finding 3.2.9 unjustified single source procurement. Review of contracts at various ministry department agencies revealed that the underlisted contract signed during 2019 was done using single source procurement. These procurements have exceeded the threshold required for single sourcing, which are set out at $20,000 for goods and $50,000 for work. Therefore, the procurement should have been subjected to competitive bidding. None for some of the reasons posted for the use of this type of procurement for the urgency of the work, and those procurements did not appear urgent as a single source route. Finding 3.2.110, failure to provide delivery notes. Examination of payment vouchers for period under review revealed that purchases of vehicle amounting to $74,091,569.92 bututs were made with no delivery notes attached. This was also no evidence that they were on file. Finding 3.2.11, contract document not presented. During the audits, we requested contracts document relating to capital expenditure that required tendering prior to awarding of contracts. Attempts were made to review the tenders or bidding documents related to award of contracts for GAM Work Agency, but the documents remain outstanding up to the time of writing the report. Finding 3.2.12, unpresented payment vouchers. Payment vouchers amounting to $392,091.67 were not presented for our review, making it difficult to confirm the authenticity of these payments. Finding 3.3, revenues. GRA revenue. Management 3.3.1.1 Management and control of GRA receipt books. During our audit, we noted that the Gambia Revenue Authority contracted Gambia Printing and Publishing Corporation for the printing of revenue receipt books for the period under review. These receipt books were controlled and managed by the GRA in contravention to both the Public Finance Act and financial regulation. Then finding 3.3.1.2 issuing of receipt without recipient signature. A review of the way books maintained at the GRA for records of receipt books supplied at various cashiers revealed that receipt books issued were not supported with recipient signature as evidence that it was issued by them. Finding 3.3.1.3 review of failure to record GTR books received from GPPC, Gambia Printing and Publishing Corporation. During our verification exercise at GRA stores, officers claim that they had used up all the GRA receipt books received from GPPC. However, our visit of the Gambia Printing and Publishing Corporation revealed that 3 are outstanding GTR and overtime receipt books totaling 890 and 400 respectively, not collected by GRA. Further discussion with the GRA officer revealed that these records are kept in soft copies, but was not provided to the audit team and remain outstanding up to the time of finalizing this management letter. Finding 3.2.2 non-GRA revenue, GRA scanning proceeds. 3.2.1.1 no backup of daily collections. During our audit, we noted $132,915,653.61 butut was collected in respect to scanning fees. However, we are concerned that the daily collection report for scanning fees is recorded in an Excel file and not backed up. No backup is maintained. Finding 3.3.2.1.2 overstatement of scanning fees revenue. During the audit, we noted that the collections made for scanning fees in 2019 was overstated by 36,868,366.29 in the financial statement. Finding 3.2.1.3 failure to present GT bank statements in respect of scanning fees. Our attempts to review the bank statement from the GT Bank was unsuccessful as the bank statements were not provided, and as a result, we could not confirm the actual scanning fees collected and deposited in the account, as well as the government share of the fees transferred to the Consolidated Revenue Fund. Finding 3.3.2.4.1.4 failure to perform reconciliations. During the audit, we noted there was no evidence of reconciliation performed between the daily collection report and the bank accounts maintained at the commercial bank in respect of scanning fees. Finding 3.3.2.1.5 absence of skills knowledge transfer between NIC TC Scan and Gambia Limited and GRA. During the audit, we noted that the scanning concession agreement between Gambia government of the Gambia and NIC TC Scanning Limited did not include skills transfer, which is considered an important provision in an agreement of this nature because it will aid the Gambia government to operate the scanning system at the end of the contract when the ownership is transferred. Finding 3.3.2.2 non-tax revenues, ministries, departments, and agencies. Geology Department failure to maintain receipts books register. In addition, during the audits, during officials, the discussion with officials at the Geology Department revealed that general triplicate receipts, GTRs, were issued to inspectors through verbal requests made by the director. No receipts for GTRs, receipt from the Accountant General is maintained to show whom they were issued, whether they are issued and whether they are returned when they are exhausted. In addition, requests made to the Accountant General Department for the supply of the GTR were not recorded. Finding 3.2.2.1.2 untraced receipts. During the period under review, we noted that the Geology Department did not maintain a cash book to record collections made in respect of license fees and royalties to both sand mining operation and stone quarries. Finding 3.2.2.1.3 non-monitoring of shipment. we noted that licenses have been issued to Gambia, Angola, and China global company, GACH company, for the exportation of sand with an agreed 60% sharing revenue to government for each shipment. The Geology Department, however, has no control in place to verify the number of shipments made or the amount of sand exported from the country and solely rely on the BOQ provided by GACH. Finding 3.2.2.2 lands differences between invoice and amounts paid. We reviewed the land net rent calculation and payment for a customer whose bill relates to the year 1990 to 2019 and note a difference of $100,000 and $208.29 between the invoice amount and the amount paid by the customer. Finding 3.3.2.2.2 suspected suppression of revenue. Examination of general triplicate receipt against the posting in the deposit slips revealed differences of $560,415.38 between the total amount of revenue collected and the amount deposited. This appeared to be an attempt to suppress revenue, and no explanation is provided to the differences to explain this difference. Finding 3.3.2.3 Judiciary, failure to pay execution fees. Review of GTR receipts against the case files and payment vouchers at the Safe Division revealed that $170,591.01 Butu, representing 1% of the judgment sum of the execution fees received from the sale of immovables and movable assets, were not paid to the Accountant General during the financial year. In addition, $682,376.27, representing 4% of the judgment sum and the execution fees received from sale of immovables and movable assets, were not paid to the judiciary for a period under review. The senior accounts clerk claimed these payments were made even though no supporting documents was provided to confirm his assertion. Finding 3.3.2.4 Department of Livestock, GTR's receipt, GTR numbers not recorded in the bank paying slips. Review of the integrated financial management systems receipt and bank paying slip revealed that general GTR's numbers with their corresponding amounts totaling $52,250 are not recorded in the bank paying slips. Finding 3.2.2.5.2 receipts without adequate supporting documents. We noted that 6 receipts in respect of non-tax revenue amounting to $5,205,500 has no survey documents attached to which was used as the basis of the charge fees. Details are in Appendix 6. Finding 3.3.2.2.5.3 failure to present non-tax revenue receipt and domestic deposit slips. During the audit, we noted that 52 integrated financial management systems generated receipts amounting to $122,623,560.73 were not presented for audit. Finding 3.2.2.2.5 disposal of government assets. 3.2.2.5.4 cancel receipts of disposal of government assets not cancelled in the system. Review of the integrated financial management systems, if missed, revealed that the underlisted receipts in respect to disposal of government assets were physically cancelled but not cancelled in the system. Finding 3.2.3.5.1 GTR receipts numbers not recorded in the bank paying slips. Review of the integrated financial management information system receipt and bank paying slip revealed the general triplicate receipt GTR serial numbers with their corresponding amounts are not recorded in the bank paying slips. Therefore, we could not reconcile the amounts recorded in the receipts and the amount included in deposit slips. Finding 3.3.2.2.5.2 unaccounted GTR books. During the audit, we noted that the underlisted GTR books used for receiving monies for the sale of government assets were not provided for inspection. The discussion with members of the committee in charge of the auctions at the asset revealed that the noted revenue books were missing after the sale of the assets. Failure to provide minutes of meeting. Finding 3.2.3.5.3 failure to provide minutes of the meeting of the disposal committee. Our attempts to review disposal committee government assets meeting minutes were not successful as the reports were not presented for verification for the period under review. Finding 3.2.2.3.5, failure to present revenue receipts. We noted that 7 revenue receipts totaling $2,224,667 is $0.50 were not presented for audit verification, making it difficult to confirm the authenticity of these receipts. Details are shown below. Finding 3.2.3.5.5 provides failure to provide information to Janet Commission proceed. As part of the audit of 2019 government consolidated financial statement, we noted that the treasury receipt amounting to $22,319,597.92 were reported as proceeds from the sale of assets by the Janet Commission. We requested for documents relating to asset disposal and their disposal proceed valuations of the asset disposed, appointment of auctioneers report, bank statement, and copies of receipts issued but were not provided. Finding 3.4, cash and cash equivalent. Differences between note 15 and cash equivalent. Cash and cash equivalent to general ledger. A comparison of note 15, cash and cash equivalent, again, balances in the general ledger revealed differences amounting to $3,321,822 during the period under review. Finding 3.4.2, inappropriate classification of non-cash accounts. During the audit, discussions with accountant general officials, we noted or reviewed the proceeds, the accounting procedure revealed that accounts are only created to facilitate posting double entries and should be cleared at the end of the reporting period. However, review of the financial statement revealed that the account balances were brought forward from previous years and classified as cash and cash equivalent under note 15. Finding 3.4.3, differences in translating foreign currencies held account. During the audit, we noted a difference of $37,551,494,200.28 between the translated cash balance, cash book balance, and the general ledger for the special project US dollar account. Finding 3.4.4, overdue unreconciled items. We also noted unreconciled items brought forward from previous years as far back as 2014. These items remain unresolved and no evidence of clearance or correction of items from the account is provided to the audit team. Finding 3.4.5, inaccurate balances to perform bank reconciliation. We performed the bank reconciliations, we performed the year-end bank reconciliations and noted that the balances in the performing the bank reconciliation were different from the actual cash and bank balances. Finding 3.4.6, sales checks. During the audit or review of the bank reconciliations, we noted that undrawn checks and payments in the treasury main account and other accounts from current and previous years have gone stale and remain outstanding in the cash book. This is contrary to above procedures for the processing of sales checks by the Accountant General Department. Finding 3.4.7, unaccounted cancelled checks. We compared and the cancelled checks of 2019 against the TMA bank statement and noted that the checks amounting to $314,745.75 were utilized but reported as cancelled or voided checks in the IFMIS. We attempt to obtain explanation from the official to justify the reuse of serial numbers of already cancelled checks to raise new payments, but no explanation was provided up to the time of drafting. 3.4.8, finding revenues collected not timely remitted to the consolidated fund. Review of the bank statements of the revenue accounts revealed that an amount of $200,000 was remitted to the CRF in 2019, even though it was collected in relation to 2019 revenue, government revenue. Finding 3.4.9, differences between general balances disclosed in financial statement and the total receipts from the general ledger 19,222. Below the line account BTL are for projects that are not budgeted for and the 193,222 code is used for receipting funds into the BTL accounts. We noted a difference of $31,192,000 between BTL receipts disclosed in the consolidated statement of receipts A consolidated receipt statement of consolidated receipt and payment and total of BTL funds receipted using the 1944 code in the general ledger. Finding 3.4.1010, receipting code used to raise payment vouchers. Accounts are used for projects, BTL, the below the line account are used for projects that are not budgeted for, and the 1942 code is used for receiving into the BTL. Review of general ledger report of each BTL project account revealed that the BTL project in the 1942 code used for receiving funds was also used to raise payment vouchers, leading to net understatement of $63,853,868.27 on the total receipts reported under cash receipts and payment. Finding 3.4.11, self-accounting projects not monitored. We could not determine how many self-accounting projects are being operated by the government, nor could we establish the amount of funds received into and paid from these accounts. Finding 3.4.12, differences in cash balances. We noted that the balance of cash disclosed in the statement of financial position does not agree with the year-end cash balance, including the statement of fine receipts and payments. Finding 3.4.13, accounts closed without verification. We noted that the 23 accounts were closed in 2019 and balances claimed to have been transferred to the consolidated fund. However, evidence of closure and transfer to funds to the CRF were not provided for our review. In addition, there was no evidence provided to show the Accountant General Department investigated balances held in this account or obtained a T24 statement to verify the actual balances prior to instructing Central Bank to close its account. Finding 3.4.114, omission of government funds held in commercial banks. Reconciliation of bank confirmation received from commercial banks against 2019 financial statements revealed that 62 accounts, government accounts, with the balances totaling $69,722,446.61 butut and minus negative 9,708.77 butut maintained with Guaranteed Trust, Sky Bank, and Zenith Bank accounts were not disclosed to the financial statements. Finding 3.4.15, unconfirmed bank confirmation. Reconciliation of bank act confirmation received against 2019 financial statement revealed that the following Senate bank accounts were not disclosed in the statement but included in the list of accounts provided by Senate Bank. Finding 3.4.16, different accounts numbers disclosed. Reconciliation between bank confirmation received from commercial banks against the list of government bank accounts disclosed in the financial statement revealed the differences in account numbers, even though the account names and the amounts are the same. As a result, we were unable to determine the accuracy of disclosures made in the financial statement. Finding 3.4.17, disclosed balances in closed account not transferred to the consolidated fund. A review of the bank statement revealed that the following accounts, which were closed in 2019, had balances amounting to $120,797 at the time of closure. There was no evidence to show that these funds were transferred to the consolidated fund during the period under review. 3.5, financial instruments. 3.5.1, finding failure to disclose financial instrument. The audit team further requested to the review of the previous financial statement revealed that several payments have been made in 2016, 2017, and 2018 towards these subscriptions. However, the financial statement does not disclose government equity participation in this bank. The audit team further requested for annual progress report and share certificates of from the Accountant General to establish the number of shares subscribed in African Development Bank, Islamic Bank, and ECOWAS Bank for investment and development, including the amount paid and the outstanding balances, but none was provided up to the time of finalizing this management letter. Finding 3.5.2, misclassification of other equity participation. We noted that the disclosure relating to equity participation have been made unless on under purchase of financial instrument note 9B and consolidated fund note 19B. Consequently, there was no adequate disclosure and explanation to enhance the understanding of the other equity participation disclosed in the following notes. Finding 3.6 grants. 3.6.1 failure to disclose grant disbursed directly to sectors. A review of grant disbursed report from the Director of Loan and Debt Management revealed that grants totaling $2,959,389,788.11 butus from the multilateral and bilateral partners were disbursed during the period under review. We noted that these grants were not disclosed in the financial statement. Details are shown in Appendix 14. Finding 3.6.2 failure to provide records of grant disbursement. We noted that there were grants totaling $92,323,463.51 butus disbursed direct to sectors during the period under review, for which no record exists at the Ministry of Finance. Finding 3.7 outstanding commitment. Differences in balance of outstanding commitment. During the audit, we noted differences of $26,000 between amount disclosed in the financial statement and figures extracted from the IFMIS portal in respect of outstanding commitment at the end of the year. Finding 3.7.2, the uncleared balances in the statement of outstanding commitment. During discussions with officials at the Accountant General indicated that the commitment were supposed to be cleared. However, we noted that the outstanding commitment of $351,691,000 in respect of the Ministry Department agencies at the year end were not cleared. Finding 3.8 tax receivables. Differences between the financial statement balances and the cash book figures. Review of financial statement against the cash book report revealed that differences of $536 million and $55,156 between tax receipts disclosed in the statement of revenue and payments under notes 3A to 3F in the tax receipts and the cash book from the period under review. Finding 3.8.2 inaccurate tax revenue balances. We noted differences amounting to $35,664,000 between prior year balances and the financial statement. In the financial statement under note 3A and to 3F, recalculated prior year balances. Details are shown in the table below. Finding 3.8.3 differences in prior year balances. During the review of prior year balances disclosed under the current financial year against the actual balances disclosed in the prior year audited financial statement revealed differences amounting to $1,105,521 in respect of tax receivable. There is no disclosure in the notes of financial statement stating the reason for the difference. As a result, we could not ascertain the accuracy of the prior year financial statement and the current year financial statement. Outstanding tax receivable. Finding 3.8.4. During the review of customs and domestic tax collection, note 3A to 3F of the financial statements, we noted an outstanding tax receivable balance amounting to $1,006,275,000 butus between opening tax receivable balance and the movement in 2019. Details are shown in the table below. Differences between tax revenue receipted in the cash book report and the general ledger. Review of the customs and domestic tax collection, we identified discrepancies amounting to $6,108,377.63 butus. And the between actual collections from domestic customs and excise tax as per the cash book report and the general ledger. Finding 3.8.6 differences between tax revenue and cash book and amount disclosed in the financial statement. We noted a difference of $536,055 $536 million and $55,156 between the tax revenue receipted under Note 3A to 3F of the financial statement against the cash book. Finding 3.8.7 overstatement of tax receivable balance. The reconciliation between tax receivable Note 17 of the financial statement against GRA tax returns revealed differences of $48,776,253.56 in tax receivable disclosed in Note 17. These resulted in an overstatement of tax receivable amounting to $48,776,553.56 from the financial year in the financial statement. Finding 3.8.8 reconciliation of cash book report and the T24 bank statement receipt in the T24 bank statement tax receipts. Reconciliation of tax revenues in the cash book and the T24 bank statement revealed an unreconciled amount amounting to $454,615,538.74 butut for both customs and domestic taxes. Finding 3.8.9 wrong computation of tax revenue returns. We performed calculation of tax revenue returns and noted a difference of $18,220,475 between the amounts posted in the general ledger and the amount on the tax returns. Finding 3.8.10 differences in account codes. We noted differences between account code used by the Accountant General Department and the account codes used by the GRA in revenue line disclosed in the financial statement. Details are shown below. Finding 3.9 arrears and guarantees, misclassification of payment 3.9.1. During the examination of payment vouchers, we noted the sum of $1,482,600 was paid to Nelly Kumba Ture from the arrears guaranteed vote instead of the arbitration and court vote, which is created to settle such payments. Finding 3.9.2 non-performance of reconciliation. During audit, we noted that since 2017, government has been paying unconfirmed arrears to TK Motors Company. In 2019, a total of $15 million was made to TK Motors. This brings the cumulative payment to $75 million and $63,250,000 made to TK Motors since 2017. We attempted to obtain copies of reconciliation performed between Mafia and the motor vehicles and the TK Motors to establish arrears owed before payments were made. However, evidence of reconciliation was provided to the audit team, established that the arrears up to the time of finalizing this report. Discussion with officials at MOFA revealed that the ministry relied on invoices issued by suppliers to settle arrears owed. This is the occurring anomaly that has been subjected to previous audit. Details are shown below. Deposits. Finding 3.1. 3.1.1 misclassification of revenues. Deposits are accounts held in trust on behalf of third parties and thereafter liabilities to government. We noted that the government revenue from the proceeds of confiscated smalling timbers totaling $90,618,000 from Senegal has been recognized under the statement of deposit of third party funds. There is no evidence provided to show that proceeds from confiscated smalling timbers are held in trust on behalf of a third party. Finding 3.1.2 accounts with wrong closing balances. We calculated the account balances disclosed in the statement of deposit as a result of as at 31st December 2019 and noted a misstatement of $85,638,000 resulting from 57 accounts that are held that has inaccurate balances. Details are shown in Appendix 15. Finding 3.110.3 third-party accounts with balances at the year end. The third-party accounts refer to funds held in trust or on behalf of the third parties by the government. These funds are deposited in special accounts with central bank as prescribed under the provision of the financial regulation. Discussions with officials at the Accountant General Department revealed that some third-party deposit accounts are transit accounts which third-party funds are held. As a result, the account balances should be transferred to relevant accounts at the year end. However, we noted that 30 deposit accounts with balances were not transferred to the respective beneficiaries' account at the year end. Details are shown in Appendix 16. Finding 3.10.4 dormant accounts not closed. During discussions with accountant general officials and review of statement of deposits in the financial statement revealed that three deposits account with balances were dormant since 2014. There were no evidence provided to show that these accounts were closed and their balances transferred to consolidate fund. Finding 3.10.5 misclassification of revenue accounts as third-party accounts. Review of the statement of deposit in the financial statement revealed that 6 revenue accounts were wrongly classified as third-party deposit account. Details are shown in the table below. Finding 3.11 timber process. Finding 3.11.1 failure to seek approval to outsource revenue collections. During our audit, we noted that the Ministry of Environment and Climate Change and Welfare entered into an agreement on January 10, 2019 with the underlisted clearing agents to serve as agents, export coordinators managing the exportation of wood from permit holders in the Gambia. Haji Baniko, HBC SAW, General Trading, Clearing and Forwarding, Jannar Procurement and Agency Services. These agents were required to facilitate the exportation of timber and collect fees of $3,600 per month per container from each export permit holder and shall remit these collections as to a designated bank account as advised by the ministry. In addition, the agents levied a fee of $900 for each container in respect of the cost of domestic and international logistics services. We were not provided with any correspondence from the Ministry of Finance and Economics for granted approval to the Ministry of Environment to outsource collection of government revenue to these private enterprises or agents. Finding 3.11.2 failure to provide number of containers exported by agents. During our audit, we noted the ministry did not receive information in respect of the number of containers shipped following the agreement with export coordinators in January 2019 to enable it verify collection remitted to designated government bank accounts. Third-party confirmation received from Gambia Port Authority revealed that 2,393 containers of wood or timbers were shipped during the period 1st January 2019 30th April 2019. We requested details of bank accounts, including statements in which the collections or proceeds from these shipments were made, but the information remained outstanding up to the time of finalizing this report. As a result, we could not confirm collections made and the subsequent transfer of funds to designated bank accounts. Finding 3.11.3 unaccounted government revenue. Our third-party confirmation of Gambia Port Authority revealed that 2,393 containers of wood or timber were shipped for the period 1st January 2019 to 30th April 2019. Therefore, this suggests that an expected revenue from January 2019 to 30th April 2019, based on the number of containers exported, is estimated at $8,614,800. However, we could not confirm if the stated amount were remitted to the relevant government account, as officials of the Ministry of Environment were unable to provide us with the details of the designated bank account for which the revenues were lodged. In addition, there is no evidence of reconciliation between the ministry and the agents, and therefore could not determine the amount deposited in the perpetual bank account. Finding 3.11.4 unauthorized use of revenues from sale of timber. The proceeds of confiscated timber are extra budgetary fund and should not be expended without the approval of the National Assembly as stipulated in the Public Finance Act. However, we noted that proceeds amounting to $90,618,000 from the financial statement figures have been transferred to the BTL account and expensed therefrom. We further noted that the expenditures amounting to $108,669,926 and 95 bottles were made from the proceeds received from the sale of timber in violation of the provisions of the Constitution and the Public Finance Act. Details of payment made in the proceeds are shown below. Finding 3.11.5 unsupported payment of timber proceeds to government of Senegal. During the examination of payment budgets, we noted the Accountant General wrote to the Deputy Governor of Central Bank, which letter reference 2104/P60 sub 10 and dated 12 December 2019, requesting the transfer of 50 million from the special deposit to the Central Bank of West Africa in favor of the state of Senegal. We also noted that the payment of 49 million $999,999,999.85 to the government of Senegal from payment budget PB 23 007820 dated 31st December 2019 in respect of timber proceed. It would appear that these transfers were made outside the IFMIS system as the payment voucher was raised 1 week after the debit advice was read in effect of the transfer of funds. Discussions with officials of the Accountant General revealed that the directive was issued from the Office of the President to make this payment, even though the documentary evidence was provided to support this claim. We requested the agreement or the MOU between the government of the Gambia and the government of Senegal to support the above transfer, but none was provided for review. Finding 3.11.6, failure to adhere to contract agreement. Examination of vehicle registers at the police headquarters garage revealed that only 15 vehicles were delivered and recorded in the register whose brands were different from the specified in the contract above. In addition, we could not determine the location of two vehicles from the vehicle register and therefore unable to establish if the outstanding vehicles were indeed procured. Finding 3.12 receivables, unretired impresses. Finding 3.12.1. From the sample of physical impress retired review, we noted an impress amounting total to $37,230,064. 4.44 butut were not retired up to the time of finalizing the management letter. Details are in Appendix 17A. Finding 3. And balances and extended trial balance. During our audit, we noted that the outstanding impress balance shown in the detailed impress report differ from the balances reported on the extended trial balance. Details are shown in the table below. Finding 3.13.1 overpayment of loan interest. Details during the examination of payment vouchers relating to loan number 3636060 Gateway Project and Upfield Loan 1112P, third public works project, we know that an overpayment of interest amounting to $4,870 US dollars, equivalent to $244,227.57 butut. Finding 3.13.2 misclassification of interest and principal payment. During the audit, we noted that the principal and interest payment in receipt of the projects were made from the wrong project codes. Finding 3.13.3 non-disclosure of penalty and commitment fee. During the audit, we noted that penalty and penalty payments of and commitment fees amounting to $383,800 and 22 bullets were not disclosed in the financial statement. Details are shown below. Finding 3.13.4 differences between payment record schedule recorded in the system and the amount on the bills. We noted the difference between the amounts in the system payment schedule and the bill sent in to creditors in respect of interest payment. Finding 3.13.5 understatement of borrowing balances. We noted that the borrowing balance amounting to $8,568,306,000 were understated in the financial statement of financial position. Finding 3.13.6 differences between statement of public debt and the figures recorded in the debt management system, Meridian. We noted an understatement of $656 million and $048,449.97 bututs during the conciliation between statement of public debt disclosed in the financial statement and debt balance recorded in the debt management system, Meridian. Failure to that finding 3.13.7 failure to disclose outstanding public debt balances. Review of the statement of public debt revealed that the outstanding debt balances totaling $1,551,371,821 reported in the debt management system was not disclosed in the financial statement. Finding 3.13.8, differences in debt outstanding balance reported in the debt management system and the financial statement. We performed calculations on the outstanding closing balance generated from the system and noted differences amounting to $59,370,875,815.73 between the amount reported in the financial statement and the recalculated amounts. Finding 3.13.9, failure to present minutes of the loan negotiation. We noted that the 8 loans were contracted and signed by the government of the Gambia during the period under review. However, the minutes of this negotiation were not presented for review. We could not therefore ascertain whether the relevant stakeholders were invited in the negotiation process during the acquisition and signing of these loans. Finding 3.14, losses of public money. Losses not fully recovered. Finding 3.14.1, or written off. During the review of the fraud file, revealed that 9 fraud cases were investigated and reported in the financial statement during the period under review. The monies misappropriated by officials were not fully recovered, and there was no evidence of active mechanism in place to recover outstanding balances. In addition, there was no evidence provided to show that legal action was instituted against the suspected to recover the outstanding balances. Finding 3.14.2, failure to disclose suspected fraud. During review of the fraud file, revealed fraud cases involving an officer at the Intellectual Property Office who used to fake receipts for monies paid by trademark applicants and not pay the amount collected to the main cashier. The discussion with official revealed that investigation have since begun under the suspected fraudulent transaction, but no evidence has been provided to confirm the assertions. To confirm this assertion, we noted through a police report reference GPF/4/4114/OPS sub 240 item 246 and dated 26 March 2019 confirmed fraudulent receipts amounting to 10,401,000 that could not be traced in the IFNIS. The above amount could not be disclosed in the was not disclosed in the financial statement in the losses of public monies in the financial statement. Finding 3.14.3, non-functional losses advisory committee. Our attempts to review minutes of the meetings of the loss advisory committee was unsuccessful as there was no evidence that the committee had any meeting during the period under review. Finding 3.15 payable. We noted difference of $2,438,631,330.62 between some balances disclosed under Note 21, payables of the financial statement and the general ledger balances. Finding 3.15.2, failure to disclose payable account in the financial statement. During the audit, we noted that the payable account, general ledger, accounts payable with account code 411815 totaling $2,801,742.78 reported in the extended trial balance was not disclosed in Note 21 of the financial statement. Finding 3.1.15 liability account with no debit balances. We noted that the liability accounts were inappropriately showing debit balances instead of credit balances in their respective general ledger balances. Finding 3.15.4 transit account not cleared at the year end. We noted that the accounts held in transit were not cleared at the year end of the financial year. Details are shown. Finding 3.16 on lending. Finding 3.16.1 on lending, failure to recover on lending to state-owned enterprises. During the audit, we noted that the government on lending totaled to $7,361,390,837.80 to state-owned enterprise. However, there was no evidence provided to show that these respective SOEs were engaged to repay this on-lend loan. Discussion with officials at MOFA indicated that the underlisted SOE consistently failed to repay government on their respective due dates, and NAWEC had never repaid government since the loan was never contracted. since the loans were contracted. Finding 3.16.2, unlent loans to state-owned enterprises missing in the debt management system meridian or database. During the audit, we noted that the government unlent loans to National Water Electricity Company, NAWEC, and Gambia Port, respectively, amounting to $1,970,000 and $606,237 is 80 butus were not captured on the unlending database at the Ministry of Finance. Finding 3.17, information systems. My colleague is suggesting we skip the IT issues. There are system issues. So we proceed to Honorable, the ball is on your court. Yes. Yes. No, that's a very good point, Honorable. I'm just asking for the chair's opinion because I was. Let's proceed, Honorable. We can proceed. Honorable, we can proceed on the IT issues, page 237. Finding 37 of 512. Yes. Finding 3.17 information system, finding 3.17.1, and find no steering committee minutes. We noted that the no minutes were maintained by the IT steering committee minute discussion with the IT officials. With the ITC officials revealed that the steering committee did not hold meeting during the period under review. Finding 3.17.1.2, no defined role and responsibilities. We noted that the staff roles and responsibilities are not clearly outlined in each member of the IT team. Discussion with the technical team revealed that there is no formal defined roles and responsibilities for the IT teams. Finding 3.17.1.3, training program. We reviewed the Accountant General's Department strategic plan and noted plan for the capacity building of IT technicians. However, discussion with officials at the ICT unit revealed that no training program was offered to the IT team. Finding 3.17.1.4, change management system. Change management system is the control life cycle of all changes, enabling beneficial changes to be made within minimum disruption to these IT services. This will include approval of procedure change, documentation of change, or fault resolution. Our discussion with the technical staff revealed that there is no change management system in place during the period under review. Finding 3.17.1.5, no service level agreement for internet and generator services. Discussion with officials revealed that there is no service level agreement exists between the Accountant General and the service providers for the provision of internet and routine services for its generators. Finding 3.17.1.6, no antivirus installed in the computer systems. Inspection of computer systems stationed at the Accountant General Department revealed that no antivirus software were installed. Further discussion with technical staff suggested that no antivirus system was available for installation in the computer system during the period under review. Finding 3.17.1.7, logbook to server rooms. We requested and reviewed the logbooks on the server room and noted that some members of the technical team do access the server rooms without recording their access times in the logbooks. Finding 3.17.18, fire extinguishers in the server room not tested for a very long time. A physical verification carried out at the server room revealed that the automatic fire extinguisher mounted has never been tested. Finding 3.17.1.9, main UPS in the server room does not synchronize. Our visit and inspection of the server room revealed that the newly installed giant uninterrupted UPS supply in the server room is not synchronizing. Instead, there is 1 second delay in manual switch over from the active to the standby UPS. This has led to installation or additional smaller UPSs as backup for the delays. Finding 3.7.1.10, system users have more rights than needed. During the audit, we noted that some users were assigned more rights than needed as per the role entitlement. Findings 3.17.1.11, unidentified administrator account in the domain. During the audit, we noted 3 administrator accounts were enabled in the domain server that could not be identified. Finding 3.17.2 Meridian, lack of technical capacity. Discussion with IT staff deployed at the Ministry of Finance and Economic Affairs revealed their lack of knowledge to manage the Meridian application software. They are yet to be technically trained and assigned with the necessary user rights. Finding 3.17.2.1, IT staff sharing the same user accounts. During our audit, we noted that the same administrator user account, being shared by IT staffs with IT staffs to log into servers which violates security best practices. Finding 3.7.2.3, irregular backup and improper storage on the Meridian databases. During our audit, we noted that the last database backup conducted on the Meridian application software was on the 25th January 2021. In addition, some of the backups more individually stored on the laptop, external hard drive, and server hosting the Meridian application. Finding 3.17.2.4, no backup of virtual servers. The servers hosting the Meridian application software is using a virtualization technology in which a single physical server can host multiple virtual servers. With this technology, servers can be easily backed up in an external hard drive, which can be restored in the event of a system failure or disaster. During the audit, we noted that there was no backup made in the Meridian server, Finding 3.17.2.5, server room door lock issues. During our audit, we observed that the keys to the server rooms were stuck on door locked. This has deactivated the security function on the doors and posed a risk to servers kept in the room. Payroll issues. Finding 3.18. 3.18.1, unpresented personal files. During our review of personal files, we noted that 93 personal files were not presented for audit inspection. Details are shown in Appendix 20. Finding 3.18.2, partially updated personal file. Personal record include comprehensive information which help to supply crucial information regarding employees. We noted that personal files from the Ministry of Education were not updated with personal records such as birth certificate, academic qualification, transfers, contracts, and retirement detail. Finding 3.18.3, poor records management. We noted deficiencies in recording and management of staff personal files across ministries. Education, tourism, health information. Weaknesses identified are as follows. Files were not recorded in the registers and referenced accordingly. Documents are not filed according to the index referencing, making it difficult to retrieve documents. Finding 3.18.4, failure to maintain personal files for staff on contract. We noted that the Ministry of Education did not maintain personal files for staff on contract. As a result, the authenticity of employees on contract could not be ascertained. Finding 3.18.5, staff receiving salaries after the end of the contract. We noted that the underlisted staff on the contract from Ministry of Education continue to receive salaries amounting to $110,855 after the end of the contract. Finding 3.18.6, contract employees status not updated in the system after the end of the contract. We noted that the following staff hired on contract from the Ministry of Education has active status in the system after the end of their contracts. Finding 3.18.7, 1/6 salary advance payments and recoveries. We noted we could not agree the recovery payment vouchers against the general ledger due to the missing recovery payment vouchers for the underlisted months as detailed below. Compliance, Honorable Chair, finding 3.19. Finding 3.19.1, failure to set borrowing limit for SOEs. During our audit, we noted that no borrowing limit was set for state-owned enterprises in contravention to the Public Finance Act. Finding 3.19.2, classes of unexpected output not in the budget estimate. During our audit, the Ministry of Finance is required to disclose the expected activities of the Ministry Department agents during the preparation of the budgeted annual budget estimates. We reviewed 2019 budget estimate and notes that classes of output and performance criteria to be met in providing those output were not included in the budget estimate in contravention to Public Finance Act. Finding 3.19.3, failure to explain material differences between budget and actual amount. During our audit, for the explanations, part 1 of the